if you extrapolate the numbers, we will get to 1 billion users.
1 billion users
by 2024. We will get to 4 billion users by the end of the decade. To explain this to people, the internet grew at 63% a year in terms of number of users from 1990 to 2000. In 1997, there were 150 million users of the internet. And as I said, it was growing at 63% a year, the fastest growth of any technology the world had ever seen. We all know that. We all talk about the internet. So here we are today in cryptocurrencies. They've also been around about 10 years. Currently, there's 150 million users, but the network is growing at 113% a year. So it's twice the speed of growth of the fastest technology the world has ever seen. We've never seen anything like this. And what this is the network of money. And it's exploding in size. It's a $2 trillion asset class currently as of today. If we look at the other major asset classes around the world, equities, bonds, real estate, they're kind of range between 150 and 350 trillion US dollars. So this digital assets, if we just follow that adoption curve that we're looking at, they will get to a $200 trillion asset class, which is, we'll have never seen this happen by 2030. We'll have never seen an asset class that didn't exist come out of nowhere and be worth $200 trillion. So to think of it, what does it mean? Why should anybody care watching this? This is an entire asset class that's going up 100-fold by the end of this decade. It's like one of the easiest ways to make money and prosper is to have a wave behind you, the wind in your sails. This is the biggest wind in your sails you'll ever have. And so many people are being cynical fighting it. And if you just turn and don't face the wind, put it in your back, you can sprint. And that's the opportunity here. So if you think about it, think of a comparison and think how stupid it sounds. If I said to you, oh, Sydney Harbour real estate's going to go up 100x. And I could pretty much show you how and why, and it was going to happen by 2030. You just do everything you could to buy as much property as you possibly could, or build it, or start real estate agents, anything. When people tell you about cryptocurrency, people are like, well, I'm not sure about that. The government's going to ban it, or, whatever it is, because people fear change. And this is a gigantic change, but it's really exciting. And there's another part of this too, which is what you do when you create an excess amount of something. So let's say iron ore in Australia. If you pull too much out of the ground, demand collapses. I mean, you've got too much supply, so prices fall, right? So if you create too much supply of a currency, and we see it because the banks are hoarding this stuff, the price of the currency falls. Now we grew up in a world where the Aussie dollar goes up against the US dollar or goes down, or the euro goes up against the Aussie, right? That's the relative valuation. But Australia, New Zealand, Japan, Europe, the UK, Canada, the US, they're all printing money. So what happens is the value of all of these currencies falls together. So well, how can that work? Surely one has to go against another. No, they fall against things of scarce supply. Gold, Bitcoin, real estate, equities. Those are why these things go up so much. It's the value of the denominator goes down, the fiat currency. So if you ever look at the chart of the Venezuelan stock market, it's the best performing stock market in the world and has been forever, but it's not. That is priced in Bolivar, but the currency keeps devaluing about 70% a year. When you put it into US dollars, the stock market's gone down a lot. This is what is going on. So the central banks around the world, the G4 big central banks, are printing currency at the rate of about 15% a year. So your hurdle on your investments is now 15% a year, or you're getting poorer. i.e. you can afford less of a house or less investments every year because of this. And crypto is one of the only things that outperforms the central bank balance sheets. So I checked this and looked at real estate prices in Germany against the ECB balance sheet. Flatline. They're the same thing. Well, German real estate looks like it's going up. Swedish real estate, UK real estate, Australian real estate, Canadian real estate, US real estate, they're all the same. What they're doing is reflecting the fall in the value of the currencies created by the central banks creating too much currency. And the point being is, I'm not sure that when you open the curtain, it's not the Wizard of Oz. The man behind the curtain, the guy doesn't actually know what's going on. We kind of are where we are. We've got the world's most indebted economies. What would any of us do? What are you going to do? Raise rates and destroy the economy? Let inflation run and destroy the debt? Or debase your currency? Well, you'll try and do all of as much as you can of not letting it blow up. So you'll just keep printing money, buying assets, don't allow recessions. Whatever you do, don't let the collateral go bust. And that's my view. And because it is risky in the way that it's volatile. So it's not a risky investment. It's not going to go bust. It's volatile, but you get more than compensated for these big price swings by the price rises, because the cycle tends to see like a 70% downside and a 10x upside every few years. So you get more than compensated for the risk. But people aren't used to taking risk anymore because the central banks stop anything bad happening or anything else. But yes, if you've got the longer term time horizon, you just buy this stuff, and when it sells off, you buy more of it and just hold it, as you would do with gold.
Thanks for watching, and we'll see you on the next one.